Shin-san, we discussed all these amazing stories. So uh, one of the things that I have learned very often, and I've begun to share it on this stage very regularly, is that in the startup world, they say that the obstacle is the way. So you are not here to go around the obstacle. You're actually here to go through, because that is the way. Because if there was no obstacle, there was no innovation. There was nothing you were solving for. It didn't need solving. But if you were seeing an obstacle and you had to go through it, that's when you were solving. So when we heard Shin-san develop this laundry folding service, right? It was an obstacle and it was the way. We're going to now move into a very interesting topic. There is so much of momentum from the policy side, from the government in Japan, to look at entrepreneurs. How can we have 10 times entrepreneurs, 10 times unicorns, 10 times the capital? And part of that is inviting foreigners to come and set up and build their startups in Japan. So we thought it would be quite interesting for founders who are not locally based here in Japan, who are sitting in the audience today, to listen to what it has been like to build a startup in Japan as a foreigner. So I'm going to invite the panel over right now. Which is this slide? Which is the next slide? Can we get the next slide? Tim, you have to come here. Yes. So Tim Romero, who until recently was leading Google for startups out of Japan, there's nobody better than you to take this talk. And please sit down, everybody.
I will try to live up to that introduction.
Yes. So take it away, Tim.
So thanks so much. I think every startup ecosystem, foreigners play an outsized role in promoting that ecosystem, whether it's in San Francisco, whether it's London. And the reasons for that might be a desire, people who are willing to uproot themselves and move halfway across the world, maybe are just bigger risk takers. Maybe it's a new perspective. But today, we're going to dig into what it takes to grow a startup, a fintech startup in particular, as a foreigner here in Japan. And to start out, we're going to do really brief introductions. So I'm Tim Romero. I'm a partner at JERA Ventures. We invest in green tech energy, sustainability, next generation energy. Before that, I founded 4 startups here in Japan. I ran Google for Startups Japan for a number of years. I helped TEPCO spin out their CVC. And I run a podcast called Disrupting Japan, which is interviews with Japanese founders about what it's like to be a founder in a culture that prizes conformity. Samantha?
Hi, everyone. My name is Sam, and I'm the co-founder of Habitto. Habitto is Japan's first connected financial experience, helping people save, invest, and protect what they love the most. As my surname suggests, I'm Italian, and I'm a mother of 2. And I've been living and working across 4 different continents, London, New York, Dubai, Singapore, and now Tokyo. I spent about 20 years at the intersection of tech and finance, about 10 years as an operator, both in large financial institutions, and I ran the Singlife franchise in Singapore prior to its exit in 2021. And I spent 10 years as an investor sitting on the other side, predominantly in venture and also in private equity, with a company called Antemis Group, which is pioneer fintech investors in Europe and North America. And that's where I met a lot of the people that are today in this room. So it's great to see you all again.
Excellent. Sam?
Hi, my name's Sam. I'm from SmartPay. SmartPay is an embedded finance company. What does that mean? We provide installment loans to consumers at the point of purchase to help merchants grow their revenue. And then as of today as well, we just announced insurance as well. So we've partnered with Chubb. And we're providing product insurance and travel insurance with Chubb at the point of purchase as well. We've signed over 20 banks and 201 credit unions. What does that mean? It means that you can pay directly from your bank account digitally. So we've connected with the 20 banks and 201 credit unions through APIs. So through our app, you can access your bank account. Me personally, I've been working in Japan since 2010. Very lucky I was with Starbucks, where we rolled out in-app payment and loyalty card, and obviously grew Japan to be the second largest market at Starbucks. Moved to MasterCard, worked with Japan as well with the banks, and then I was at Facebook and WhatsApp and Instagram in Japan, and learned a lot from Zuck about success in Japan, and decided to go on my own.
Good morning, everyone. My name is Paul Chapman. I'm the founder and CEO at Moneytree. We're a financial data platform based in Tokyo. We work with some of the largest banks, such as SMBC, one of the sponsors, Mitsubishi UFJ, Japan Post Bank. We have some of the fastest growing up-and-coming startups in Japan using our data platform to get access to over 2,500 data sources. We've been at this for a while, so I hope I can share some longitudinal views on this. Not as long as Tim. But thanks for being here today, everyone.
Hi, everyone. My name is Jeff Wentworth. I'm the co-founder of Curvegrid. We're a blockchain infrastructure company based here in Japan. We've been around for 7 years. We've been profitable for the last 3. We make it fast, easy, and cost-effective for companies of all sizes, both Japanese and international, to build on blockchain versus doing so from scratch. I've lived in Japan for 18 years now, previously at Goldman Sachs and EMC, and looking forward to sharing thoughts with you today. Thank you. Fantastic.
So there's a lot of talk and advice online about what it takes to grow a startup. Some of it's more meaningful and useful than others, but I think one of the really unique opportunities we have here is that we've all been through this. So what I'd like to drill down with to start out with is, from your own personal experience, what's been your biggest challenge as a foreign founder in Japan, and how did you manage to overcome that? Let's go the other way. So Jeff, why don't you kick us off?
Yeah, sure. So I had lived in Japan for 11 years when we started Curvegrid, and at that point, and even today, my Japanese is not perfect. It's not, I wouldn't even say fluent. I do business meetings in Japanese sometimes. I think maybe it's more tolerated when we're talking about technical things because of my technical background. So I think one of the key ways to overcome, let's say, not only a language barrier, but a business culture barrier, even that for someone like myself who had lived and worked in Japan for more than a decade at that point, was finding the right partners. And by partners, I mean, service companies, service partners, agents that could help us do things like start our company, deal with our accounting, deal with our legal matters. And I think those service partners have also evolved over time as we've grown as well. And I think, some founders here successfully do everything on their own, but for us, like having that network of partners was something that really helped us overcome a lot of challenges, and to this day as well.
So were those partners mostly on the administrative side, outsourcing accounting and things, or did you rely on those kind of partners for sales and execution as well?
Yeah, it's a good question. I think you have to always play to your strengths, right? So I come from an enterprise sales background in Japan, but also globally. And so I think we needed probably less support doing that and more support on legal, accounting, pension, payroll, HR, those sorts of things.
Excellent. Paul, what's been your experience?
Okay, so this might be a bit controversial.
I love that.
All right, well, first of all, I've been studying Japanese a long time. So I came here as a student originally, then I was a local hire at a company here about 18 years ago. I haven't been here the whole time, but this stint is pretty long, about the same amount of time total as you. And I always thought, well, Japan kind of sucks at software, except for games. So I think I can contribute something there. What I've found, despite speaking accentless Japanese, although my wife tells me it's much better now than when we started Moneytree, I'm like, no, it was good then. But notwithstanding we could communicate at an equivalent level, our overseas experience and our overseas pedigree or achievements, anything that is sort of put on the scales of how sparkly you are as someone they could invest in. So fundraising was the big challenge for us. I should have said that. Fundraising was the big challenge, and the impediment was anything we did overseas was largely discounted because it wasn't in Japan. So I've sold my first company I started when I was 23. I was the CTO. We sold it to Thomson Reuters. But for some reason, in the early days when we were fundraising, that was somehow less important than an Ivy League MBA. It's like one guy's got a swim certificate, I've swum the English Channel, and that wasn't really put on the scales, and it didn't weigh very much. So we had to build credibility. So getting to how did we overcome this challenge? I used to talk about this as manufacturing credibility. Now, I don't mean like making things up and putting it on LinkedIn. Don't do that. What I'm talking about is finding people who would trust us, and they themselves were very trustworthy, and that gave us the ability. Because I didn't work in investment banking. I did study banking and finance and thought, I never want to do that. I want to start a startup. In hindsight, working in investment banking is a really good way to learn how to raise money. Working as a VC, Sam, that's going to help you a lot, obviously. Not trying to teach anyone how to suck eggs. But in Japan, you need to find people here who trust you, and then step by step, like climbing a ladder, you will build your own credibility. So today, when Moneytree, and thank you to all the people who work with us and all the people who worked for us and who still do today, when I go somewhere, that's my pedigree. Like, I'm from Moneytree, I'm one of the founders, we do these things, we're doing our best. In the early stages, they're like, who the heck are you guys? And the first company to trust us in Japan was actually Apple. So we were a personal finance app. We were Best of App Store 2013, Best of App Store in 2014. We were a launch partner for the Apple Watch. That was the first rung on the ladder of credibility. The second was our Jokyu Komon, our senior advisor, who worked for 30, 40 years at Sumitomo Bank and in the Mitsui Sumitomo Financial Group. And he vouched for us. And I'll stop there. I've got more good stories. But mapping your overseas credibility to Japan, even if you've got fantastic brands like my co-panelists today, you still have to show how that is going to work in Japan.
Excellent. Sam?
So I'm going to talk execution. What we often get asked is, how did you sign 20 banks? How did you integrate with 20 banks? How did you sign 201 credit unions? And how did you integrate that? And how did you do that in 8 months? So really what we did was we focused on 3 fundamentals. One is, in Japan, often you're told no. I remember with Howard Schultz, they said to him, Japanese don't like coffee, they're not going to pay $5 for the coffee, they don't like experience, they're not going to pay for experience, and you're not going to succeed here. And now Starbucks is the second biggest market in the world. I saw with Instagram, actually, as well. We were told Instagram, Japanese are shy, they won't take pictures of themselves and share it on social networks. And so you're given the no. And so the question for us was, how do we get over the no? And that really is about, how do you sell the vision? But Japanese don't want a vision PowerPoint. They would like a document specifically on how you're going to execute, the monetization of that execution, and a timeline. And if you miss one day, the trust is gone. So number one fundamental was setting up that vision in a very executional way, not a fluffy, what I call Australian or American way. The second was really our staff. Again, what I learned from Howard was, you need to, first of all, focus on your staff and invest in them. If you do that, when they turn up to meetings with these partners, they exude a confidence and a belief that really Japanese do pick up on. And if your staff don't believe, if your staff think it's selling a product, that really does fail in Japan. I'll give you an example. Our leadership team, 5 of them have all been promoted this year. Set very high goals, but everyone's been promoted. And the third fundamental to get over is actually sales. Sales culture in Japan, I always say, this is the hardest market to sell. Cold calling in Japan is really hard. So your sales team are going through a lot of stress every day. And you need to nurture your sales team very carefully. Because I think in America and Australia and the West, selling's a lot easier. Here, they're getting so many no's and quite hard no's. As an ego, it's very hard. So really taking care of your sales team and nurturing that sales team was critical.
I want to drill down on one thing you mentioned. So the importance of meeting the milestones and hitting those executions. So as a startup or even a business developing new business, there's a lot of unknowns there. Milestones are missed pretty regularly. And How did that play out? Or how have you seen that play out?
First of all, it gives your team massive heart attacks because you're making promises to people, and in the meeting, your staff are looking at you going, "What?" But you can execute. You set that goal. I find our Japanese staff work hard, they will deliver, and they can do more than they know. And that's something that I find important. If we stuck to a timeline that we all agreed to, it would be too long. So it is this about how do we push that level, and then how do we, what I learned from Zuckerberg was even our company goals are 3 months. Like set 3-month goals, not 2 years, 5 years. And that helped the timeline a lot.
Excellent. Samantha?
Do you want me to answer the first question or the second question or both?
The first question. What's, from your own experience, because I think it's been quite different from ours here.
Yeah, so first of all, just a little bit of context. I think we are part of sort of new generation of fintechs here. We're 2 years old, and frankly, I wouldn't be here, the team wouldn't be here if it weren't for the advice that I actually got from some of the earlier founders, and some of this are here. So one of the first port of call when we looked at Japan for me was to actually talk to as many founders as possible, particularly foreign founders. And the challenge that we had, and frankly, we're a foreign founder. I've never lived in Japan. I don't speak a word of Japanese. So it was an altogether different order of magnitude. We have no context here other than a firm belief that Japan is probably the next destination market for fintech. And I have seen many fintech markets in the world. Japan really has all the hallmarks of an emerging ecosystem and the 4th largest economy, and it has the fintech density of Estonia. So, you know, if you look at it through the eyes of an entrepreneur and even through the eyes of an investor, this really speaks as a very, very interesting market with great potential. So we were attracted by that. We're also attracted by some specific customer, I would say, characteristics that we noticed in other markets. But here in Japan, take a very particular sort of cultural connotation. And we were very encouraged by changes in the regulatory frameworks. Again, as a foreign entrepreneur, particularly in the fintech space, you know, those are characteristics that make you think differently about a market. And this is not just us as entrepreneurs, but actually, guess what? A lot of global investors are now starting to think about Japan as a real destination for foreign capital. So my biggest challenge was getting into the country to begin with, and be relevant. Be relevant because we really had exactly the same challenges. You know, they looked at me and said, well, foreign girl, do you speak Japanese? No. Do you have any context? No. What are you doing? So creating that credibility was really critical, really, really important. And so one thing that I think we did differently, and I would certainly recommend this for anyone that is foreign to Japan coming into the country, is to think differently about how you approach building a business. Normally, you do product regulation team, typically in that order, right? And you're trying to sort of get to product market fit as soon as possible. In Japan, because of the particular context we were coming, we actually had to flip it. And for us, it was like team regulation product, almost done in that order, which is why 2 years in, we actually have a team, 4 licenses, 3 partners, and about 10,000 customers. We're about to hit our A round, which in 2 years, for a foreign firm that didn't exist and a foreign brand, I think it's quite something.
Excellent. And if I can add to that, I think this is, from my own experience, both with my early startups and running market entry for an American startup coming into Japan, I think this is very close to what Samantha and Paul were talking about. I find one of the biggest challenges is signaling your commitment to the Japanese market. So in Japan, Japanese, especially Japanese enterprise, have a, let's call it a well-deserved mistrust of foreign companies coming into the market, promising to fix all their problems, promising to be here forever, and then pulling out 3 years later when the US market turns down. So one of the things that we faced, and I think most new companies face, is proving you're going to be here. You know, proving you're going to walk the walk when things get tough. And the way we solved it were through partnerships with large institutions, so we were kind of borrowing their credibility, and by making sure we had feet on the ground, people locally that they could call and talk to and occasionally yell at when things went wrong. And that really built our credibility in terms of our commitment to the market. Let's talk about, let's flip that. Let's be a little more positive instead of talking about problems. For foreigners that are coming to Japan to start a startup or have already started a company here or thinking of doing market entry, what would be the best piece of advice you could give them? And we're going to do it randomly here. So Sam, what would you tell aspiring founders or new founders here?
So number one is product quality, customer service, customer success. And it's obviously called servant leadership. You have to have a servant leadership to your staff, to your customers, and it really is very humbling. So there, in my mind, what I see is different is you either have 100% quality, say in America and Australia, or you have 75% quality, customer success rates, or 50. In Japan, you have 100% or zero. There is no sliding scale. If you make a mistake, that is a very big deal in Japan. Less so in America, where startups can be funky and cool and, oh, sorry. That doesn't exist here. So really building your product quality to a level that even you didn't think you should do as a startup. We spent 1.5 years just building our infrastructure because we knew that one mistake could mean the end. And I know that sounds really scary, but I'm telling you the truth. One mistake can be the end because everyone's talked about trust. And one mistake can kill that trust. So I'd say product quality and customer success. Customer success, what does that mean? It is lots of follow-up, lots of communication. It's going and meeting handshakes and talking about the timeline, the detail of execution. If you're going to miss one date or one feature, why, how, and how you apologize for that. And literally humbly apologizing that we are very, very sorry. Not oh, by the way, we're missing this date, but don't worry, it's next week. Because that's our mindset. Next week's just soon. But here it's, well, can I trust you on a bigger project? So product quality and customer focus is, I would say, the big thing.
That's really interesting because so much of US startups is viewing support, customer interaction as a cost center. And which, I mean, technically it is, but Japan has a very different mindset for that.
It's branding.
Yeah.
It's branding. So if you lose that branding, I would say customer success is your first brand touch.
I'm curious.
I have a
Samantha,
different experience.
I was going to ask you this because you're you are consumer facing, and I'm wondering if it's the same as the same is true on the consumer side as well as the enterprise sales side.
I can certainly, for me, one of the biggest surprises of being here in Japan and marketing products in Japan, I have marketing products in many, many different cultural contexts, from American to Europeans, Southern European, Northern European, kind of different. And in, Arabic countries as well as, Singapore, mostly sort of Chinese context. And so I came here with some background, but open to be surprised, and surprised I did. I was definitely surprised. I've noticed that the Japanese consumer tend to be much more open and tolerant to process and to multiple steps, even when the steps make absolutely no sense. And there's this need for guidance and reassurance that really permeates how people make decisions. And we spent a lot of time really deep into what we call the psychology of money. How do people make decisions when it comes to their own money? And it is different here than in many other cultural contexts that I've noticed. Not only the obvious sort of risk tolerance that is different, and this permeates the entire society. Incidentally, even how early stage investors think here is very different. But I find it that is quite the way actually the consumer mindset works when they have to take decisions that involve risk or have to involve, say, take multiple configurable options on products. Guidance, reassurance, and to the point of sort of where advice is really valued. That is surprising because the process of DIY here is far less common than in other cultures that I've seen, which actually pose interesting tensions when you're building essentially digital products. And we're still going through that process. I don't think we've really cracked that psychological framework yet, but we have, I think, discovered a very powerful insight that will lead us to build the product and the service infrastructure and the customer communication in ways that would have been done differently in other contexts.
I can add to that. So I had a very similar experience. The U.S. startup that we brought into Japan, there was a part of the onboarding process was a server configuration. And I won't go into the details, but the American team had made this wonderful configuration wizard. It was like a 5-step process. It would ask 1 or 2 simple questions and guide the user to the right configuration. And our Japanese clients hated it. They just hated it, and they couldn't explain why. And we had a debugging tool that was this really ugly screen with about 50 or 60 different options all grouped together. And purely by chance, one of our customers saw that and was like, wait, that's what we want. Like, really? And we showed it to a few other customers, and it was unanimous, yes, that's what we want. So we cleaned it up, we made it pretty. And after a couple months, we noticed like everyone was migrating to that screen, and we went around and asked people. And most of them didn't know, they just said it's nicer. But from those that gave an answer that made sense, it was that they felt safer knowing what all the steps and the questions were going to be before they started. So they could get all the information, they had everything they needed to know, then they felt confident they could get it done. And
we used to talk about this as Japan being a society with no undo button. So the example of this that everyone who moves to Japan will experience is if you fill in an application form for like the gas or electricity, mobile phone, if you make a mistake on the form, you have to start again with a new form. You can't just correct it. In Australia, they'd be like, nah, don't worry, mate, just change this one thing. In Japan, they'd be like, here's a new one, please start again. And when you do that enough times, you're like, okay, I don't want to keep doing this. So the incentives reinforce the same behavior that every Japanese person has learned because the incentives are powerful. And Sam and Habitto's mental models are very similar to ours in the early days because we were pure B2C to begin with, and now we're both B2C and B2B2C, and we do enterprise sales, so it's confusing. But it's been an interesting journey. But our mental model was, in Japan, talking about money is kind of dirty, historically. It's changed quite a lot in the last 10 years and maybe 20 years, but traditionally, money is considered a dirty concept, very different to China. And so as a result, people who have wealth they don't brag about it, they don't show it, they kind of hide it a bit, which is also very different to America and China. So as a result, people have a lot of, neuroses, hang-ups, a lot of feelings and values. Sorry?
Anxiety.
Sorry?
Anxiety.
Oh, anxiety, yeah. So when we made the Moneytree app, we said, let's make expenses green. That's also our corporate color, because most of your transactions in your app are going to be expenses. You might get one salary payment most people will get one salary payment a month and have 100 expenses. And if they're all red, how are you going to feel? So we approach it from this perspective, very similar to Habitto. And what we also came up with, another mental model that might be helpful, was no scary buttons. Because we're asking you, hey, we know we're at the top of the Apple App Store, but you've never heard of us. People said we were hackers because we were asking you to type in your bank password. Now we have open banking, and so we don't take the password directly for banks. But we launched, and we had like me and a few foreign founders on the website, and they're like, who the heck are these guys? So we had to make it as safe as possible. So we had no scary buttons. We made it very simple. We were the first to squish it down into the little iPhones. They were tiny. They were like the size of a postcard, smaller. So these mental models will help you. But to answer Tim's original question, briefly, Warren Buffett talks about, it's not timing the market, it's time in the market. And I would say the mental model for coming to Japan, to deciding, is both. It's both timing the market, when's the market ready for you, and also time in the market, as to Sam's point. We also spent a year preparing, and we only launched with like an iOS app and support for 40 institutions. We do 2,500 today. We have iOS, Android, we're integrated with an API platform. It takes time to build. But like you, we were like, if we mess up, we're going to get either put in jail or kicked out of the country, because we're doing something that we weren't even sure when we first decided to start Moneytree whether it was legal. We found out that it was, and then we said, okay, we can move ahead.
It's kind of a relief, I'm sure.
Well, I mean, because, could we get in trouble for asking everyone for their bank passwords? What if we leaked them? So we took extreme precautions to make sure that never happened, and thankfully it's never happened.
Well, actually, let's talk about timing, because I agree. And research backs this up. The single most relevant determinant of startup success is timing. Especially from outside Japan, but even from inside, how can you tell that the timing is right? Because being right too early is the same as being wrong.
Very true. Howard Marks, I think, said that, right? Yeah. That rung in my ears. I only read that 3 years ago, though, so we started Moneytree 12 years ago. Darn. So what I said to founders who I met yesterday, who've raised a lot of money, they're big, like hundreds of millions of dollars, I said, you need to give it 5 years. And what that does, it gives you a 5-year window to establish your relevancy, to adapt your product for people to start taking notice of you, and it takes years. What Sam and Samantha have done is amazing in such a short time. So maybe maybe it's going to go down to 3 years. But I said, give it 5 years, because if you don't, you're not ready.
I find that, sorry, I just want to ask.
No, go ahead.
Please. Go.
No, please go ahead. I'm going to come back to something else, so please go ahead.
It's a little bit of a slightly different angle to timing, but one of the, I guess, major lessons learned from having seen so many different fintech ecosystems developing, by far, in my opinion, the biggest driver and the timing of those ecosystems developing is actually a regulatory opening. I mean, let's not forget that finance is a regulated industry, and regulation is absolutely at the cornerstone, at the basis of it. So when the regulator opens opportunity for, banking API, payment infrastructure, data exchanges, intermediary licenses, then these are the kind of cues that especially entrepreneurs look to basically create a bit of what we call regulatory arbitrage. Some of the best startups in the world in the fintech space actually were born and basically became category leaders purely based on regulatory arbitrage. I know it sounds a little bit boring, especially if you're not in fintech. It kind of, by the time people start talking about regulation, people start yawning. But it's absolutely proven fact that this is how the biggest catalyst for innovation happens in markets. So staying close to the regulator is important, and also help the regulator to help us is very important.
How does that play out? I'm interested in getting everyone's opinion on this, but how does that play out in Japan? Because the regulatory regime in Japan is, let's say it's run a little differently than it is in the US and Europe. A lot of it is informal guidance, and you're saying you weren't even sure what you were doing was legal really for sure until years later. So how do you navigate that, especially when you're trying to do something new?
So just to talk about arbitrage for a second, I think regulatory arbitrage and other sorts of arbitrage is a really fascinating context in the case of Japan, but also timing as well, and actually red ink. So I wanted to tell one really fast anecdote around the color of expenses versus other things. It's interesting because for anyone here who's corrected their children's homework in Japan or seen corrected homework, there's these big red circles all over it. And the first time I saw that, oh my gosh, my son's gotten everything wrong, because in Canada, red ink that's circled indicates an incorrect answer. And you'll notice in the emojis, right, emojis that we have on our iPhones or Android phones, the graph that shows that's going up, if you look graph going up, is in red. Whereas in Canada or America, that might be going down. So I think the arbitrage piece here, the piece to think about is, and it has to do with regulation also, tying it back, is that, if you're a founder coming into Japan, there's a decision to make. And that first decision to make is, are you coming into Japan to sell into the domestic market? And I think the 3 or 4 fellow panelists here, at least 3 fellow panelists, are really, that's your focus, I think, right? Selling into the domestic market. But there's another option, which is basing your startup in Japan, but selling globally. Maybe focusing globally to start. And I think especially if you're coming in here, not necessarily as a consumer app, and not necessarily set on selling into Japan at first. It can be a great place to locate your company without having to get into all of the regulatory complexities first. And so that's more on the general arbitrage piece, which is Japan being a great place to, I think, to base a company with strong rule of law, very good regulations, a great banking system, very clean, safe. From a founder's perspective, relatively inexpensive in terms of salaries or in terms of office space, in terms of all the service providers we spoke about before. So I think that's another option, right? Come to Japan, set up shop here, and then look at selling globally and taking advantage of kind of that arbitrage. And on the timing piece, that's something that wasn't so possible or easy even 5 or 10 years ago. It was difficult to, I'm a Japanese company, how are we going to raise funds from overseas investors or even from Japanese investors selling globally? But I think that is more and more possible today. And then that will give you, if you do want to sell to the domestic market, which is a huge market, world's 4th biggest economy, nothing to sneeze at all. You can have a startup that sells all day to Japanese consumers or businesses. But I think that's another arbitrage opportunity as a global founder. You know how to interact globally, and you can also then build that experience selling locally as well.
Let me ask one thing. So as far as coming to Japan to start a startup, starting a startup in Japan with global ambitions, I think it's great, obviously, because that's what I've done. I think all of us do. But for people who might not agree, why? There's far more money to be raised in San Francisco or New York. Singapore is also in Asia. That's a clearer regulatory regime, perhaps easier access to capital. So why come to Japan to start a startup?
Yeah, it's interesting, actually. I'll just drill in on one point there on the clear regulatory regime in Singapore, and no disrespect at all to everybody who's here from Singapore today. I know that's where the origination of the Fintech Festival, of course, but I think there's some areas where Japan actually has an edge, and that being the business we're in, which is blockchain and Web3. I think the regulations are actually much clearer in Japan. Blockchain, cryptocurrency, Web3 is not a dirty word here. We can, as a software company, get a bank account, get access to capital, file our taxes, be audited, all of these things without having really any concern. I think based on what we've heard from some of our peers in, let's say, Singapore, for example, there's still some big challenges there, let me just say. So actually, I think that, that's one piece. I think in terms of raising money, the anecdote, which I think is still true to a point, is you spend the same amount of effort to raise like half the capital. So I think, again, playing these arbitrage sort of pieces or looking at kind of the advantages there is a much lower cost base here. I don't think you need to raise as much money as you do in San Francisco.
Yeah, I want to build on the regulatory point because I think it is probably all of us is the one thing that really is the first success milestone for all of our companies. And I want to sort of talk about the difference of regulators in the rest of Asia and Japan. I've worked with India, Singapore, Australia, America, and the Japanese regulatory environment is very much, the way I describe it is Word document. It's written in a Word document, it's a lot of pages, a lot of guidance, but you need to interpret it. The mistake I've seen Western companies make is send your lawyers and regulatory managers to meet the regulator to interpret those documents. And I know that sounds counterintuitive, but they're the worst people to meet because actually what the regulator wants is how do you interpret that into product? So what we did is we sent our product people to meet the regulators, and we worked with the regulators, and I'm talking specifically around our direct-to-bank license. So you can pay directly from your bank account to buy at merchants around Japan. And we're the only ones to have that ability through API banking. And the way we did that is we worked for 3 months with the regulator on the product, joint. And most companies don't want to do that. You turn up, you present what you want, you get feedback, you go away. And we kind of workshopped, and the example of that was in our app now, before you get access to your bank account, you have to do 2 biometrics. One before your bank account comes up and one before you pay. And it was the regulator that wanted that. And we were like, we don't want these steps. This is too many steps. But actually what it did is increase the trust with the consumer. And that relationship we have with the regulator is about product design, workshopping, versus here's our interpretation and your interpretation.
So the input of the regulator actually ended up with a better product.
Yes,
That's
absolutely.
really-
Yeah, absolutely. And I've learned my lessons. I've worked with Western companies in Japan that have managed regulatory really badly. They walk in and they say, here's what we want, tell us yes, or we're going to argue for 6 months.
Well, I think there's, particularly coming from the US and the EU as well, there is sort of an adversarial relationship with the regulators, where in Japan it sounds like it needs to be much more collaborative.
A lot more collaborative, and if they can be involved in that product design, and I'm talking real product design with the consumer UX, the relationship blossoms, and there's a trust there. And ultimately, consumer safety of data and safety of money is what they're worried about. So that's where your starting point has to be. It's not consumer UX speed, it's consumer UX safety first.
Excellent. When you were unsure whether you were legal or not, how did you handle this uncertainty of the regulations?
Well, you've got to understand that we did launch after we figured out we'd be legal. So that just wanted to make that clear to everyone. So we didn't have much money. We were bootstrapped by 2 of the founders, including me, because I had an exit before to Thomson Reuters, and just waiting for that next exit. So this is what we did. We went to 3 different law firms, and every law firm will give you a free consultation the first time. And so we took a progressively more evolved view of where we think we're at from the first to the second to the third. And the third law firm had an ex-FSA secondee there. So by the time we got to the third, it was like, you know what, this is definitely legal. As long as we don't lose anyone's data, which was our plan to begin with, because we love privacy and security, engineering-focused company to begin with, that would be okay. And so that cost us nothing. But I imagine if you've got funding and you're coming in from overseas, you can probably afford a lawyer.
Fantastic.
We pay our lawyers now.
That's good to know. Samantha, you've entered a little later. Have you found the regulatory structure to be more clear, or are you having to kind of navigate the ambiguity as well?
So I don't have a prior comparison because I never worked in Japan before, so I don't really have a benchmark here. But I have other benchmarks, and I worked with the FCA and the MSA. As I said, one of the reasons as to why we looked at Japan at this particular point in time, back to timing, was because of the introduction of this new regulatory regime called New Intermediary License, which is how we're currently licensed. And the thought process, I think, that the regulator went through was to basically cut the intermediation of financial products horizontally, as opposed to actually what happened historically, which is basically vertical, so banking for banking, securities for securities, insurance for insurance. That really caught our attention. And the framework was, and in many ways, is still new. So in fairness, this was an attempt by the regulator, and certainly our intention to continue to work collaboratively to continuously refine this framework, which is conceptually a really great thing. Being new still requires some work, particularly around product definitions and some parameters, the constraints, if you like, the perimeter of the license. So I definitely expect further evolution of this license. It's still a lot less clear than, I would say, traditional banking or payment institutions, e-money license, etc. So I don't know how this is going to evolve in the future, but certainly our intention is to continue to work constructively. One key difference that I've seen here in the regulatory framework is, compared to others, is, and maybe it's back to this idea of doing things first, things right from the get-go. In other environments, it's quite common to have sandbox that startups can actually work collaboratively, constructively with the regulator through POCs or through versions of sort of early versions of the product. And here, this was missing. For us, probably wasn't such a such a large gap because of what I said before. It was brand new regulatory framework anyway. But I can imagine, particularly for those that are entering, existing frameworks. I mean, if you're a foreign founder, there's a lot that you don't know. The language barriers, the cultural barriers are really, really large. And so if you're a foreigner that never lived in Japan and has no construct or connection here, the support system that you would like to see from a more developed ecosystem is still growing, right? So I would certainly encourage generally the institutions, the regulator, the service providers to think about that, because as a foreign founder coming into Japan and having to build on that, can't be the lawyer, the payroll, the corp secretary, the legal firm, all of that. We had to go one by one and find them, right? So the idea of sort of business in a box, of which the regulatory component is an element, if you're a fintech, is still missing.
So I just wanted to build on Samantha's great point. So the regulatory, the sort of the macro readiness and support to be here is, I guess, the first constraint. But the larger constraint for your success here is customer adoption, whether it's enterprise or consumer. And that's what I meant by this mental construct of it's both time in the market and timing the market, because you could be waiting many, many years. So, we often have investors or clients say to us, Moneytree, we have a product called Moneytree Link. It's the financial data aggregation service. This is critical infrastructure for fintech in Japan. But we're not a $10 billion or even a $1 billion company at this stage, because the amount of demand that's in the market is still constrained. Now, over the next 5 to 10 years, that could very well happen. But timing, we've been at it with Moneytree Link since, I think 2015 that's when our first accounting software clients came online. So that timing portion is really important. So give yourself a 5-year window.
In fact, that I think leads into one of the things that I've found many foreign founders and many people experienced with doing business overseas are surprised about Japan is the speed of decision making, the length of the sales cycle, how long it can take to bring on new clients. And I'm wondering, in something like fintech, which is moving fast, which particularly in the enterprise, there's an appetite for new innovation. Have you found that to be the case?
I think there's a lot of companies, like one thing you have to be careful of if there's I don't know, let's say a speed bump that you might run into as a foreign founder coming into Japan is a lot of large companies will want to do a proof of concept and sell it to you as like, there's definitely a next step. There is an immediate next step. We're going to do something. But I think oftentimes that proof of concept, which you will or should get paid for, often doesn't go anywhere. Or takes a lot longer to go somewhere than you think it will. And so I think, when you're thinking about like that as a speed bump and what are the next steps and the time that it takes to get into the market, you've heard this from all the other panelists, like budget more time than you think. It is absolutely going to take that time, number one. Number two, I think the second piece is finding trusted partners. And Tim, at the very beginning, you asked me about sales partners. I think having intermediaries, having whether it's system integrators or accounting software partners or distribution partners, community organizations or clubs that are going to try out your software and sort of share it with their Papatomo or Mamatomo or whoever is a part of that. Like those groups that you're working with, I think are absolutely key. And those organizations that you're working with as intermediaries are absolutely key to helping you succeed in this market. I think direct sales is a much tougher way to go here, is what I would say.
My standing on POCs, right? Like no free POCs.
Absolutely.
I think we did one free POC in the history of Moneytree, and it was in the end it wasn't actually free. They paid us 10 million yen, but yeah, no free POCs. You want to get paid if it succeeds.
I will second that as well from my own experience. No free POCs.
I just want to talk about the customer acquisition timeline that you raised, and I think if I want to talk execution, if you're going to have to go through the chain of command in any enterprise company in Japan, and everyone has to get alignment. But if you want to nail down exactly what is that alignment, it's risk. It's actually not just value proposition. So Western mindset is what's the value proposition, and we keep hammering that. But actually what they're asking is, what is the risk to my job if this goes wrong? And so what you need to do is really clearly identify why this is riskless, right? And that's why I'm going back to that product quality, is it comes down to, this is riskless because this product works. This is riskless because we'll take care of your customers, and we will make sure every part of our being will execute for you. And so to me, about the speed, it is showing the risk. Then the second thing is steps. I think you have to work in steps with the regulators and with merchants or enterprises. They don't work in sort of, I would say, a decision. So you've got to work in, here's the first step, here's the second step, third step, and that could be a year.
Yeah.
And if you get frustrated, your staff get demotivated. And that's why I come back to the other point, taking care of your sales team is critical. Nurturing them, come on guys, keep going, because it's the hardest market for sales.
And I think one thing that's important to keep in mind is that I think it all averages out on the end. That once you've got a customer, they're going to be much more loyal. It is just as hard for a competitor to take a customer away from you as it was for you to take it away from them. So I think mathematically it all works out.